Hello and good morning, folks. Welcome back to Almus Market Mornings. And before we begin, I'd like to thank you all for making Almus Rupee Money Conference, our annual conference, such a delight and enriching. Coming back, this is Shikhar Garg bringing you the update for the week in the financial markets. World's three major central banks would be wrapping up their most aggressive years in terms of policy as their fight against inflation continues. With this week, Fed, BOE, and ECB, all of them scheduled. Fed chair has already put a split amongst market participants about the potential terminal rates, along with how long would the rate hikes be in place, resulting in an interesting set of actions as well as reactions. So, Pankaj, I'd like to know a bit from you on these sides, like what should we be expecting out of these central bank meetings and also in the financial markets?
Morning, everyone. Before we start on a global markets, let's touch upon what happened in our conference. What were the views? So, global economy still has a very huge uncertain period ahead. That's the broad theme which we got in the our conference. Particular focus would be whether US get into a severe recession, which is always followed by an oil crisis historically, and US has not seen these kind of a steep rate hikes in many years. Also, the stress likely to be in the U.S. non-government bond markets could result to an undesirable financial event as U.S. continues to maintain a high interest rate to fight the unrelenting inflation. Now, these would be the core factors they would be looking at. As for the Indian economy, while financial economy is doing extremely well, the picture of the real economy is still not so good. There is a concern that the twin deficit of fiscal and current account and low probability of getting large flows in the face of a tight global financial condition will continue to challenge the rupee. How much reserve the RBI can afford to give up in defending the rupee is a matter of serious debate. There is no definitive conclusion as to whether the RBI has seen its worst level in this cycle. So, coming to the global markets, data from the US provided enough trigger for risk sentiment to further take a hit. Core PPI was 0.4% against 0.2% expected, highlighting that risk while inflation is starting to ease, it may not ease as quickly as market expects. On the positive side, one-year inflation expectations of University of Michigan survey fell to 4.6% from 4.9%. Uh, that's basically being a reflective of the fall in oil prices recently. The PPI is not usually a market mover, but markets are jittery ahead of the FOMC meeting, which will decide its outcome on Wednesday evening. There was a fall in S&P 500 also. The S&P 500 fell by 0.7% and 3.4% for the week, where the Nasdaq down almost 4% for this week. 10-year US yield on Friday moved higher by 10 basis points after the PPI data, and 2-year moved up by 4 basis points. Still, the 2-year and 10-year curve is around 78 basis, which is significant enough. The outcome of our upcoming ECB policy decision this week is beset with even more uncertainty, with mixed view expressed by the member of the committee. Euro has been supported by the fact that many investors have not given up the possibility of 75 basis rate hike by Lagarde. Some corrections seem to be on Friday, and maybe some corrections happening today as well. 1.0440 is important level for support side, and 1.06 is the resistance. But looking at the other currency too, it has been mixed picture. AUD and JPY closed around their best levels, where Canadian dollar ended almost near its worst level in months. Yuan has given up some gains on fears among the market analysts that recently announced COVID rules relaxation could lead to a big surge in number of cases. However, with as many as 9 major central banks are expected to announce monetary policy decision this week, and along with the CPI data, which will be US CPI data, which will be releasing on Tuesday evening, the volatility is guaranteed this week. The important development is happening in oil prices also. Global crude oil prices have dropped more than 10% in last week on fears of a lower demand due to global slowdown. Uncertainties still rule, awaiting what Russia does in response. Putin has recently made a very strong statement. They may cut production in response to said that those who follow the cap will be hurt most. Coming back to rupee, after mildly hawkish statement from RBI, markets have started repricing rate expectations. As minimum 25 basis rate hike in the month of February is guaranteed, and not guaranteed but expected with a higher probability. Some economists are started expecting 50 basis rate hike. So 25 in Feb and 25 in April would be a possibility. This sell support INR for some time. INR likely range today is going to be between 80 to 30, 80 to 65. That's all from me. Thank you.
Okay, Pankaj, that was quite good. And yes, folks, as the stalwarts in our conference mentioned, real economy for the Indian markets may continue to hold some concerns with the twin deficit, influencing the kind of flows that we're getting from the investors. On the other hand, US non-government bond market could result in some undesirable financial events in the US, as uh, Pankaj mentioned in his commentary today. But on the other hand, we have observed the sentiments for the China as a nation or the investment spot have been changing because of the relaxation in the COVID, as well as some glimpses of possible uh, re uh, or glimpses of possible change in the real estate market. On the other hand, a strong statement from Putin on the oil front has put some concerns on the growth and the prices for oil along nations. So that's the kind of updates that we've been hearing around. Folks, that's it for today, and we shall come back again tomorrow with another fresh round of updates as well as expectations from the central banks. Thank you so much for listening.